Welcome to Pulse of Politics, your go-to channel for breaking global news, deep political insights, and trending international stories, all in simple, clear language. In a major turn of events, China has announced sweeping tariffs of 34% on all goods imported from the United States. This bold move is seen as a direct response to the U.S. government's recent escalation of tariffs on Chinese imports, also at 34%. The situation marks one of the most serious economic confrontations between the two largest economies in the world in recent years, and the global economy is already feeling the pressure. Let's take a deep dive into what's really happening, what led to this moment, and how it could impact you, no matter where you are in the world. The background, how we got here. This trade standoff didn't start overnight. Earlier in 2025, former President Donald Trump returned to the political stage with tough new economic measures. One of the most controversial was his decision to impose a 10% blanket tariff on all Chinese imports, citing national security and economic protectionism. But China didn't take that move lightly. Soon after the U.S. tariffs were announced, Beijing responded with its own tariffs targeting American agricultural products, energy exports, and technology components. That set the stage for a full-blown economic tit-for-tat. Things came to a head in April when the United States escalated the tariffs from 10% to 34%, saying it was necessary to balance trade and protect American jobs. China matched that 34% increase almost immediately. Market reaction, a global shockwave. The global economy responded with alarm. The U.S. stock market plunged, with the S&P 500 alone losing $2.5 trillion in value in a single day. Investors worldwide began shifting their assets to gold and other safe haven commodities. In Asia, markets tumbled. European economies, which are already grappling with inflation and energy shortages, warned that the ripple effects of this trade war could lead to an economic slowdown across the continent. Supply chains, which were just beginning to recover from pandemic disruptions, are again at risk of major delays and cost increases. Real-world consequences. So what does this mean for everyday people and businesses? Higher prices for consumers. Tariffs are basically taxes on imported goods. Companies usually pass these extra costs on to customers. That means Americans could soon be paying more for electronics, clothing, home goods, and even groceries. Pressure on small businesses. Many small businesses in both countries depend on international supply chains. Higher import costs could force them to reduce their workforce or shut down completely. Fewer jobs. Industries like farming, tech manufacturing, and automotive production are already seeing layoffs. American farmers, in particular, are being hit hard because China is a major buyer of soybeans, corn, and pork. Slower global growth. International organizations like the World Bank and the IMF are warning that the U.S.-China tariff war could reduce global economic growth by up to 1.5% over the next year. China's strategic moves. China is not just relying on tariffs. They're playing a longer game. They've started restricting the export of rare earth elements, which are vital for producing smartphones, electric vehicles, and military technology. Suspending poultry and meat imports from major U.S. food producers under the excuse of health concerns. Pushing trade deals with other countries like Brazil, Russia, and India to lessen their dependence on U.S. trade. In other words, China is trying to cushion its economy from U.S. pressure and diversify its economic partnerships. Global reactions. The rest of the world isn't standing by quietly. The European Union is urging both the U.S. and China to de-escalate the situation. European Commission President Ursula von der Leyen recently said, "A stable international trade system is in everyone's interest." Japan and South Korea are calling for emergency G7 talks to coordinate responses. Vietnam and Mexico, ironically, are benefiting from the trade war as companies shift their supply chains to avoid the tariffs. U.S. domestic reaction. Within the United States, opinions are divided. Supporters of Trump's economic policy say it's about time the U.S. stood up to China's unfair trade practices. Critics, including many economists and business leaders, warn that the tariffs could lead to higher inflation job losses, and a slowing economy. Even some members of Congress from both parties are calling for urgent negotiations to stop things from getting worse. What happens next? Here are 3 possible scenarios we may see play out. Negotiation and de-escalation. Diplomats from both countries might return to the negotiating table. If this happens soon, the worst impact could be avoided. Full trade war. If both sides keep increasing tariffs, the global economy could slip into a recession, especially if other countries get drawn into the dispute. Global realignment. Companies and countries may start shifting supply chains away from both the U.S. and China, leading to long-term changes in how global trade works. This latest round of tariffs between the U.S. and China is more than just a headline. It's a complex, high-stakes chess game with real consequences for people across the globe. From workers in Ohio and farmers in Iowa to electronics manufacturers in Shenzhen and logistics companies in Germany. What happens in the next few weeks will set the tone for international trade in the years to come. Will diplomacy prevail, or are we headed toward a deeper global trade war? Thanks for watching Pulse of Politics. If you found this breakdown helpful, make sure to like, subscribe, and hit the notification bell so you never miss an important update. Leave your thoughts in the comments. We'd love to hear your take on this escalating situation.